way to our very first quarterly market update. My name is Rob Behrens, Principal Advisor and Director of Godfrey Pembroke Brisbane Private Wealth. I'm joined by Dr. Steve Garth, who sits on our investment committee. Welcome, Steve.
Yeah, thank you, Rob. Great to be here.
Terrific. Well, Steve, it's been a very, very interesting quarter with the collapse of Silicon Valley Bank. Obviously, interest rates still being quite topical at the moment, and inflation. What's happened in Australian markets?
Yeah, let's kick off with Australia. And in fact, the Australian market had a fantastic start. In January, it had the highest return for January it's ever had. It was up by 6.2%. Now, you can see in the chart here, it did drift sideways over February. We had rate rises on Feb the 7th and March the 7th. But it was still looking like a pretty strong quarter. But then, on the weekend of March 11th and 12th, we heard the news that Silicon Valley Bank had collapsed. By the way, Rob, I don't think anyone had heard of Silicon Valley Bank before then.
True.
But not only did Silicon Valley Bank collapse, but it instigated what they call a contagion effect, where every bank started to wobble, including banks in Australia.
Yeah, well, the interesting thing that I probably noticed that the Australian market had a very good calendar year last year, and with the collapse of Silicon Valley Bank, there was quite a dislocation between the two, like Australian markets and global markets. With APRA telling us that there's no cause for concern here in Australia, what happened there? Why was there such a dislocation?
Yeah, well, let's show this on a graph first of all. You can see that actually over the last 12 months, Australia and international markets kind of look pretty similar until you can see that Silicon Valley Bank collapse, and it's like the international markets continue going their merry way while we fell on a hole. It's a really good point. If our banks are the best banks in the world, how come we were hit hardest by it? And the answer is that, in fact, our banking sector wasn't as hit as hard as overseas, but it makes up over 30% of the market. So when banks are down in Australia, it brings the whole market down. Now, overseas, banks only make up about 11%. And names like Silicon Valley Bank and even Credit Suisse are actually quite tiny parts of the banking sector.
Are there any other reasons for the dislocation, Steve?
Yeah, so besides this big difference in banks, it's also got to do with the tech sector. Now, believe it or not, the Nasdaq is up by 18% this quarter. It's phenomenal. But remember, it was down by over 30% last year. But here's the thing, Rob, in Australia, the tech sector is tiny. It's less than 4% of our market. Particularly in the US, what they call tech and communications, the FANGs, the Facebook, Apples, Netflix, Google, they make up about 40% of the market. So that huge lift in tech stocks, a rebound, if you like, has really lifted the rest of the world market.
Which makes sense, I guess. So the concentration risk that we have here in Australia with banks making up a big part of our index is probably the main reason.
Yeah, that's it. And of course, it's a great reason why we have diversified portfolios here that invest both in Australia and internationally, so we can smooth out some of that concentration of sectors around the world.
Makes sense. And what about bonds, Steve? They've had a very, very rough trot, probably some of the worst that we've seen.
Yeah, in fact, last year was absolutely the worst year for bonds on record. And to be honest, the start of this quarter didn't look that great either, because as you talked about at the start, Rob, we've had interest rates going up because inflation seems to be stubbornly high. As those rates go up, the bond yields go up, bond prices go down. But when Silicon Valley Bank collapsed, yields fell. In fact, they fell by as much as they had since the GFC. And the reason for that, bonds are seen as a flight to safety, a flight to quality. So suddenly investors started rushing back into bonds on the fear that the banking crisis would actually spread further. And of course, it's also a rush into bonds because there is a fear that the US will go into recession later this year.
Yeah. Well, thanks for that, Steve. That goes a long way to reinforcing our investment philosophy of long-term sustainable growth, being the focus, not short-term volatility in markets, and also being adequately diversified across, all markets globally as well. Thank you very much.
Terrific. Thanks, Rob.
Cheers. Thank you.